I'm Susannah Streeter and I'm with Steve Clayton. A sharp rebound in economic growth could bring with it a sharp increase in inflation. So Steve, what impact would that have on our investments?
Well, inflation destroys the real spending power of money. And that's why when we build HL Select portfolios, we look to find companies that have got real pricing power so that they can withstand the impact of inflation and deliver value through the long term, whatever's happening.
Now, I don't want you to gaze into your crystal ball as such, but what do you think the potential for the return of sustained inflation is?
I think there's a big difference between the potential for the return of inflation and the return of sustained inflation. What we're seeing at the moment is the dropping out of a sharp period of deflation when the pandemic first hit the world. And that's causing the headline rate to jump up in the near term. But longer term, there are still lots of deflationary forces out there. The digital economy and globalization have been very, very powerful forces in driving inflation down and keeping it that way. And I think we're likely to see those reasserting themselves as we move further through the year.
And what impact do you think adapting to the post-Brexit world will have on economic growth and inflation?
It's an interesting question because whilst we can see that there is disruption happening at the ports, in fact, there is so much more happening as a result of the pandemic that I think actually we're never really going to know what the true impact of Brexit was, good or bad, simply because it's going to be drowned out by the much stronger impacts of the pandemic and the recovery from it.
Do you think a rise in inflation will affect growth stocks in particular? Because we've already seen a wobble in tech stocks. Do you think the prospect of higher inflation and higher interest rates will take the wind out of the sails of big tech in particular?
Well, it's a question that's often asked, and there are lots of technicalities involving how inflation can impact on discounted cash flows and all that. But I think it's much more important to look at what is happening to demand growth for individual companies when you're trying to work out their prospects. And right now, I see very strong demand indeed for investment into technology and digital communications. Lots of companies realized in the pandemic that it was absolutely critical to invest in their ability to reach customers digitally. And we've seen lots of money going in towards investments in building out e-commerce capabilities or using machine learning and artificial intelligence to improve productivity within factories. And I see this demand remaining very, very strong. And the stock market rarely turns its back for long on companies that are delivering consistently strong growth.
Do you think then this acceleration of the digital ways of working could in itself lead to inflationary pressures?
I don't think that's going to happen, Susannah, because whenever we've seen digital technologies employed, they've tended to drive down costs. In the financial sector, we all used to write out checks and they used to be handed over to somebody who'd have to take them to the bank and they'd have to be paid in and then people would have to process it. Now transactions happen digitally, it's all straight through processed. Cost has been taken out of the system. If you're looking in the world around you, you can see sensors helping traffic flow more easily or monitoring production and helping efficiency levels rise. Digital technology tends to act to drive down costs. So actually, I think in the long run, it's going to be a powerful force for lower inflation.